a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Hi, everyone. Welcome to Exploring ETFs. I'm Neena Mishra, and today we are talking about Internet ETFs. And Internet stocks and ETFs have been among the top performers, not only this year, but over the past decade. That's because we know that Internet is fundamentally transforming our economy and our society, the way we work, the way we entertain ourselves, the way we shop. And this has accelerated during the crisis because billions of people around the world stuck at home are now dependent on the internet for work, for their school, and for entertaining themselves for play. So, as Microsoft CEO Satya Nadella put it, he said, we have seen 2 years worth of digital transformation in 2 months. And some of these changes are going to be permanent because consumer and businesses are making those changes, for example, shopping online or contactless less payments, because as businesses digitize and they start accepting electronic payments, that would be more convenient for customers. So those changes are going to be permanent. And companies that are exploiting the latest internet technologies, they are expected to create biggest shareholder value in the coming years. So that is why I think the trend of growth in internet stocks and ETFs is going to continue in the coming years. And today we are taking a look at 3 very popular internet ETFs. So the first one we'll take a look at is by First Trust. It's called the First Trust Dow Jones Internet Index ETF, ticker symbol FDN. It holds largest and most actively traded US internet companies, follows a market cap weighting methodology, charges 52 basis points, and very popular, 8.4 billion in assets. It's been around for about 14 years, and it was one of the top performers of the past decade. Now, if you want to learn more about this ETF, you can go to the quote page on Zacks.com. You can read our research report articles, and you can also go to the external homepage, First Trust web page for this ETF, and look at other details. So it holds companies that generate a majority of sales and revenues from the internet. And they should have a minimum trading history of 3 months and minimum market capitalization of 100 million. And if you look at the top holdings, not surprising, Amazon, Facebook, PayPal, Netflix, Cisco, these are among the top holdings in the ETF. Now, the second one that we will talk about is by Invesco. It is called the Invesco Nasdaq Internet ETF, ticker symbol PNQI. It holds largest and most liquid US listed internet companies. So not only US companies, but some Chinese companies too that are listed on the US exchanges. Now, remember that a couple of weeks back, US Senate started a bill which could force Chinese companies, these Chinese internet giants, to delist from the US exchanges if they do not meet our audit standards and our shareholder protection guidelines. That may or may not happen, but these companies may be more volatile, particularly amid rising US-China trade tensions. It follows a modified market cap weighting methodology. It is slightly more expensive, a little bit smaller than the earlier one. 62 basis points in expenses, and has AUM of 616 million as of now. Again, to learn more, you can go to the quote page. From there, the external homepage, the Invesco web page for this ETF, and you can look at portfolio, top holdings, Amazon, Facebook, Adobe, Google, and you see Alibaba too over here. As I mentioned, it has about 15% exposure to Chinese internet giants. So that could be volatile, amid rising tensions, something to keep in mind. Now, the third one that we are highlighting today is by shares. So this is if you are Shark Tank fan. This is by Kevin O'Leary, Mr. Wonderful of Shark Tank. It is called O'Shares Global Internet Giants ETF. So as the name suggests, it holds global internet giants. It has a lot of exposure to global companies, and many countries have much lower internet penetration compared to the US, and that penetration is rising much more at a much rapid pace compared to the US. So more growth opportunity, but more volatility too. And this is in fact one of the top performers this year. It follows a fundamental weighting methodology, focuses on quality and growth among companies. It is the cheapest in the space, the cheapest among that we highlighted today with 48 basis points, much smaller but still decent AUM of 158 million. And now we can go to the quote page on Zacks.com. And from there, the external web page, O'Shares web page for the CPF, and look at other details and holdings too. It has, let's take a look at the exposure. I wanted to highlight that first. So it has about 67% allocation to the US companies, then about 20% to Chinese companies, about 2.5% to Canadian companies. The Canadian companies, Shopify is there, which has been one of the top performing companies this year. Then Germany, Argentina, Australia too. And looking at the top holdings, Amazon, Alphabet, Microsoft, Tencent, which is a Chinese company, Alibaba, again a Chinese company, Facebook, and Wayfair. These are the top holdings in the ETF. Shopify too that I mentioned. Now, I also took a look at the performance this year. This is the comparative performance year to date versus the S&P 500 index. And as I mentioned, OGIG, O'Shares product, is the top performer this year, up about 30%, whereas the other two, Firstrust and Invesco ETFs, are up between 13 and 16%, whereas the S&P 500 is down about 5% this year. Thanks for watching, and I'll see you next week.